Welcome everyone. In this video, we will examine and analyze the breakdown of Zbcn Coin. Don't forget to subscribe and like, and please watch to the end so you don't miss anything. We can say that the downtrend observed in the previous analysis has now been broken and a retest move has followed. This is considered an important step in technical analysis, because when a trend line is broken and a subsequent reversal to this level occurs, this is often perceived as a signal for a change in the market. Retest means that the broken level now becomes support. If a strong buying reaction is observed at this level, the price is more likely to move upwards. If the price starts to move slightly after the retest, it is an indication that the market is starting to take a new direction. This can be considered a very positive development for investors, because usually a break of a downtrend, followed by a retest, indicates that the market is strengthening and starting to enter a potential uptrend. If the price holds during the retest, it shows that buyers are stronger and prefer to buy at this level. This suggests that buyers have taken control and the price has the potential to move higher. For the time being, the fact that the price is starting to advance a bit could also be a harbinger of this rise. A slow but steady advance could signal that the market is gaining strength and is entering a phase of gaining greater momentum. Such initial moves should usually be watched carefully, because often such small advances signal the start of a strong move. If the price is able to sustain a sustained rise at this level, it could pave the way for bigger moves. The fact that the price starts to advance after this breakout and retest also indicates that the market is psychologically strong. Many traders are tempted to buy when they see the market retesting this level after the breakout. This shows that confidence in the market is growing and buyers are starting to enter the market more. This creates a favorable environment for the price to rise further. Also, the trend has been broken, but we cannot understand the chart with only one indicator. Let's look at the other indicators so that we do not make an incomplete analysis. It can be observed that the price approached and tested the resistance line on the upper side 3 times, but each time it failed to cross this level. Such situations are critical levels that need to be watched very carefully, especially in technical analysis. If a price level is tested several times over a period of time and still cannot be crossed, this indicates that it is strong resistance. However, if the resistance level is tested many times, the market can no longer resist it, and the probability of breaking it increases over time. This is because the strength of buyers increases against a continuously tested level, and it can be considered weakening. When traders observe that the price is trying this level again, and they have failed in previous attempts, they now have more confidence that this level can be broken. In this case, the price crossing this resistance line can be considered as an important technical breakout. If this time the price manages to break through this level, it would be a strong signal that the uptrend has begun. A break of the resistance level is not only an important technical development, but it could also herald a psychological transformation in the market. When traders see that this level has been broken, and the price is now starting to move towards higher levels, they may find more encouragement to buy. This kind of breakout usually mobilizes more traders in the market, as breaking through the resistance level is considered the start of a potentially uptrend. If a breakout of the resistance level occurs, this can create a solid foundation for the start of a new price move. Once the resistance point is broken, the previous resistance level becomes support this time, and the price can hold on to this support point permanently and move higher. From a technical perspective, a break of the resistance level indicates that the market is gaining momentum and moving strongly upwards. With the start of the uptrend, a faster price increase can be observed, especially at first, as traders start buying after this new breakout. A break of a resistance level usually signals the beginning of a new trend in the market. If the price rises strongly after the breakout, this indicates the start of a new uptrend. The continuation of this trend can be better understood by accurately monitoring the support and resistance levels. In particular, the fact that the price holds above the old resistance level, acting as a new support, is an important factor that increases the strength of the trend. For traders, such a scenario can create a strong buying opportunity. We should patiently wait for the price to hit the resistance level. The RSI indicator is showing a clear downtrend. The RSI has been moving under the influence of this trend for a long time and has repeatedly touched this downtrend line. However, it has failed to break through this resistance level each time. Such technical situations provide important signals for traders, because when an indicator moves within a trend and consistently encounters resistance, a break of this level can lead to a major change in direction. If the RSI breaks this trend, it could indicate that the market is gaining strength and a bullish momentum is starting. In technical analysis, when the RSI breaks a falling trend line, it is usually considered a bullish signal. This is an important signal that the selling pressure in the market is subsiding and buyers are gaining strength. The RSI often gives clues about the direction of price movements by entering oversold or overbought zones. However, not only when it reaches these levels, but also when it breaks a trend, it is an indication that a significant change is taking place in the market. If the RSI breaks the current downtrend to the upside, this could signal the start of a bullish market. It is possible to say that if the RSI breaks the falling trend line, the dynamics in the market will change, and more traders will start making buy trades. This is because such breaks in technical analysis cause a change in investor psychology and increase confidence in the market. In particular, if the RSI makes a volume-backed move when breaking this trend, the bullish movement will be stronger and more sustainable. RSI breakouts supported by volume are generally considered more reliable signals and can lead to larger price movements in the market. RSI breaking the downtrend to the upside can also have a positive impact on price action. Usually, the RSI gives certain signals before price movements, and when a breakout occurs, prices will follow. So, when the RSI breaks above the falling trend line, it can be an early indication that prices may also make a bullish move. In particular, if an RSI breakout coincides with an upside reaction from critical support levels, it's an important signal that the upside is likely to be stronger. At this point, it is important to keep a close eye on whether the RSI will make an upside breakout. If the RSI crosses the trend line to the upside, and this move is supported by trading volume, a major bullish move in the market could begin, and many times it will touch the trend, weakening it. On the MACD indicator, the MACD lines are observed to move significantly upwards. This type of movement is usually an indication that there is strong buying pressure in the market and that prices may continue to rise. The MACD is an important tool used to determine the strength and direction of the trend, and in particular, crossing MACD lines can signal the start of a new trend. Currently, the upward progression of the MACD lines suggests that the positive momentum in the market is increasing, and there is a high probability that prices will continue to go up. An upward movement of the MACD suggests that buyers in particular are becoming dominant in the market and that prices are likely to push higher. This kind of movement of the MACD can often herald the start of a broader bullish move in the market. Traders often watch for such bullish movements of the MACD, and an upward movement of the MACD means increased buying opportunities. This is considered a signal that the market will continue to move strongly upwards. If the MACD lines continue the uptrend that is currently going on, this could mean that prices will continue to rise further and the market will exhibit a strong upward movement. The MACD is a highly effective tool for being able to determine the continuation or reversal of a trend. Therefore, a continued upward movement of the MACD lines indicates that the prices will move towards higher levels and the market will continue to be bullish. By keeping a close eye on this kind of development, traders can gain more confidence in making purchases. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.